through the telephone, or are you coming through the computer?
No, I'm not. I'm coming through my microphone.
Okay, good.
But I have my mobile with me, so I can have some sound. Why? Is there a problem?
No, no. I'm just wanted to check which whether you were being able to use the microphone. So I think it's a better solution than the telephone. So that's working. So you can hear me and we can hear you, and
Perfect.
that's all we need. The next thing we need to do is just to try and do the screen share, so that if you're ready with your computer, what we'll do is we'll transfer and we'll see your screen. Do you want to do that now, just while we've got a few minutes ahead of the start time?
Yes, I'm okay.
Oh, great. Okay, we're just doing that now.
I'm ready.
That's super. I can see your first slide. Trader development model, smart system to professional trading. Now, Alex, you have quite a few letters after your name, it has to be said.
Yeah, I know. I should be put fewer next time.
I'm sure if you rearrange the letters, it's going to spell something fantastic. But there's a lot of T's and a lot of A's, and the T's and A's stand for technical analysis, do they not? Am I right?
Yes, yes.
Because this is
I guess I get a bit too trigger happy when I was younger, getting my certifications and stuff.
Well, it's great. But this is your home turf, isn't it? Technical analysis, charting. You lead up the UK chapter of the technical analysis.
The market the Market Technicians Association. Yeah, that is correct. I've been there for about almost 5 years now. It's a long time.
Fantastic.
And I've been in the business since 1998. So that's even longer.
Fantastic. And you hold regular meetings?
Yes, most certainly. We have regular meetings, monthly meetings. Each month we invite a speaker from the institutional investor community, either from the buy side or the sell side, hedge fund analysts or traders or bank analysts, and they give a presentation on a topic. The presentations are free to attend. So if any of the esteemed members of your community that are attending the seminar would like to be attending our next monthly meetings, please, by all means, feel free to email me. My email address is alex@tradertd.com. I will be giving out my email address right at the end of the presentation as well, so I can invite them at the presentations. Like I mentioned, they are free to attend. There's no catch.
This is a physical meeting where you actually physically get together.
Yes.
In a venue.
Yes, we hold them each month at City University Business School.
Okay, so for everybody that's overseas from the UK, it's probably not an option. This is a London-based regular.
Yes, this is a London event, but for those that are overseas, again, please do email me because I can send you links, because we have chapters all over the world. And if you're in a part of the planet where there is no chapter, all the events or most of the events are recorded, and so you can access them online as well.
Oh, fantastic. Now, trader development model, the SMART system to professional trading. I don't want you to give away what you're going to be talking about, but I'm guessing you have it's a very technical based system that you've been using for your own trading. Is that correct? Is that what you're
actually, well, the trader development model is actually a model to develop traders. It's basically my own personal proprietary solution to answer one particular question. The question is, how and what do I have to learn in order to become a trader? So before getting into the wiggles and the waggles of technical analysis or fundamental analysis, because please note that in my heart I'm a fundamental analyst, although I use charts a lot. But because there is so much information there and everything is so disjoint, people hear from one speaker say this, from the other this, and I'm sure everyone feeling a lot of confusion. The model is the procedure actually on how someone can structure their studies and lead them on a step-by-step basis to become a professional trader. So it's not about just the specifics of technical analysis or fundamental analysis, but rather what is the path, the learning procedure.
Okay, it sounds very interesting. Well, we're just coming on to 5 o'clock now, so that's the start time. So, Alex Spiriglu, am I pronouncing your surname correctly?
Yes, most certainly.
Wonderful. Thank you for joining us. I'll hand over to you and let you get started with the presentation. Thank you.
Great. Simon, thank you very much for the invitation. I would like to thank everyone for attending. I'll try to be as brief as I can, so please excuse me if the pace I'll be speaking is fast, because the actual seminar that I'll be doing today, and I'll try to keep it at 35 minutes, it's a part of a workshop that I do which lasts around 2 to 3 hours. So I'm trying to condense just the bare basics of it. So without further ado, let's begin. The trader development model, the SMART system to professional trading. The question I get asked from traders all the time is, what and how do I learn to trade for a living? What do I have to learn and how do I learn it? So the trader development system is basically it's a system to to systematize the procedure of what you have to learn and how you have to learn it. Now, before we get into the what and how you have to learn, my first answer is learn to be smart or learn the rule of 90. That's my first reply on what and how you have to learn it. The rule of 90 is it comes from a statistics from the brokerage industry, which says that 90% of the people will lose 90% of their capital within 90 days. This is an official statistics that is referring to private investors that deal in leverage investments such as CFDs and spread betting or futures. So I always found that it's a bit of a quandary why 90% of the people would lose their money. While there is so much information out there, I mean, there are so many books and seminars and sources of information, but the problem is that information is sometimes either of low quality or disjoint. So this is how we will try to overcome this. Now, this is the trader development stages of the system I have created. Actually, there are 4 stages of knowledge for someone to learn how to trade for a living. The actual levels themselves, I didn't create them. It came from a very well-known model, which is this one. Well, the stage 1, it's called unconscious incompetence. Well, basically, when someone doesn't know that they don't know. The second level of knowledge is consciously incompetent, which means that you still don't know, but you are aware of your ignorance. The third level of knowledge is about being consciously competent, which means you've already gained some knowledge, but you're very deliberate and conscious about what you're doing. It hasn't become still second nature. The fourth level of knowledge is what we call unconscious incompetence, and that has to do with someone has mastering their craft so well it's become second nature. So, for example, like think of Michael Jordan, where you had to take the last second shot at a basketball game, and he just had basically 1 or 2 seconds to throw the ball in the basket, and he did it not because he had time to think and strategize, but he'd done it so many times during practice that it becomes second nature. And that's the fourth level of knowledge. Now, these 4 levels of knowledge, they come about in anything that you want to learn, whether it's like trading, music, maths, it doesn't matter. Driving, I mean, it's a standard of how we learn. So I've adapted this model in how we learn trading. So these are the levels. This is the procedure of knowledge, but we also have to learn what we will be learning during these levels. Now, during these 4 levels, you will have to learn 5 things. The acronym starting from the bottom going up is SMART. It's S.M.A.R.T. Each letter stands for a thing we will have to be learning at each level, and we will be unveiling what each letter means during the presentation. So let's begin with the analysis of the first level. What's unconscious incompetence? So the motivation for someone to start to trade is if they have an interest in markets. They want to sometimes have a get rich quick dreaming, or they may think of having a career change. For example, think that success is transferable. I've been a successful doctor and think I can trade for a living now. Now, so what they do, first they hear about the benefits of trading, the lifestyle. The second is they accumulate some information. Then they open a brokerage account. And lastly, they begin making donations to the market, which means is losing trades. Then they still want to trade, but they understand that it's not that simple. So the actions going for that is they start listening to outside traders. I mean, what other people are doing. Then they go back to the markets and donate some more. Then they switch markets and say, okay, I can't trade the euro. Maybe I'm better at doing the cable. Maybe I can do equities, or I can switch products. Then they go back to the market and donate some more. At the last stage is basically they start the point where they really feel frustration, and they start blaming others for having lost their capital. So the feeling is anger. Now they go back to the market and donate some more. And then they feel sometimes fear or embarrassment because they may have to share the results with their spouse. And the fourth step is, I mean, they go back to the market and donate some more in a desperate attempt to regain some of their capital. Now, the technical profile of people on stage one is that their mentality is they think trading is like sex. You don't have to be good at it to enjoy it. The time commitment towards studying markets is low. Trading plan is they do not have one yet. Trading journal is, again, they do not have one. And the key statistics regarding the stage one traders. The size of the market is about 70%. I mean, 70% of the people never go past this level. The winning percentage is less than 45%, which means the largest part of their traders, their trades is losers. The win-loss ratio is less than 1 to 5, which means for every £1 they win, they lose 5. And the hold time ratio again is 1 to 5, which means they when they go into position, the position gives them a bit of a room. They book their profits in a desperate attempt to have a profitable trade. But when it goes against them, they keep the trade without having a stop loss, just because they think it may go again back their way. And so that means that the time they hold their winning trades is, say, for example, 1 day. And when they hold their losing trades, because they hope that it might go back their way, it might be like 3 or 4. It's a multiple of that. So the hold time ratio is usually 1 to 5. Now, the problem one we have to face, because during the process of the presentation I'll be presenting the 10 problems, will have to be the 10 challenges. So the first problem is ignorance and ego. If someone admits that they don't know and they need to be doing some serious work in order to find how markets work and how to trade, I mean, this is what requires to go to stage 2. 70% of the people prefer to blame others, their brokers, the markets, governments, anyone else but themselves. So in order to go from level 1 to level 2, the first thing that is required is admittance of ignorance. So back to the trader development stages model. So you're in level 1. The first thing you have to learn is self-awareness. So this is the S of the S.M.A.R.T model, if we look at it from bottom up. Now, in order, if people for the people that have gone that admitted their ignorance and say, okay, I'm willing to put some serious work, that's the step needed to go into conscious incompetence, which means they know that they don't know, but they started doing some work. So what's the mentality and the actions? They first say, okay, I want to learn about markets. The motivation to learn the basics of price movement, and the action is to take a technical analysis course. A technical analysis course. Then buy some technical analysis books or some fundamental analysis books. And then they begin doing donations of the market. I mean, having losing trades. The problem here is that learning about the ingredients is not the same as learning a recipe, which means, yes, you may learn about the basics of technical analysis, how the RSI or divergence works, or learn fundamental analysis. I mean, what's the PE ratio or price to book value ratio, but it's not but you learn the ingredients, but not the recipe. The recipe is how you take all the ingredients together, the flour, the butter, and the milk, and create a cake. So basically, you need a trading plan, and the people confuse at this stage that by learning the tools they have created the recipe, but that's far from truth. The third problem is how to create a recipe, because yes, of course, you may have know the tools, but how do you structure them together? Then the next problem that they have to face is how to verify, how to backtest a recipe. Because yes, you may have an idea of how you can say if X, Y, Z is this and ABC indicator does this, but it may be an idea that just sounds good. It's not actually good. So how do you verify it? So basically, you need to backtest it. Problem face is even if you verify a backtest, does the recipe, the strategy you've created, is it good for you? Which means, yes, a strategy may be profitable, but there are a lot of statistics in it which don't suit your character. For example, if it has a very low win-loss ratio, which means you have to be losing often, but when you win, it really goes your way. So in a way that your winning trades cover for your losing trades, but someone may not be able to stand at a low loss-win ratio. So in that respect, the strategy may be profitable, but it's not something that suits them. They can actually trade it themselves. So that's the technical profile of people in stage 2. The mentality is that trading is learning technical analysis, which is not correct. The time commitment is moderate. I mean, people have started studying technical analysis, they have started devoting some time or fundamental analysis or any other procedure, but they do it on a moderate time commitment. The trading plan is they may or may not have one at this stage, which means they may have taken the tools, started to putting them together and writing down an idea so they can sort of have a structured procedure. So there's a bit of a mixed bag. Some people have created the trading plan, or some people are in the procedure of trading plan. Some people have not bothered. They understand the need for it, but they haven't just sat down and do it. Trading journal, they don't have one. Most people at this stage, they don't have a trading journal. And by trading journal, I don't mean just a record of your transactions, but also a record of your thoughts and feelings, but also a record of the charts themselves, and providing reasons for why you did a trade. The key statistics of this market. The size about 20%. I mean, 20% of the people get stuck on this level, which means you've got a 70%. Well, actually, it's more like 60% that gets stuck on level 1, and then you have another 20% who gets stuck on this level. The win percentage, again, it's around 45% to 50. I mean, there may be some slight improvement in the win-loss ratio. The win percentage, the win-loss ratio, again, there's a slight improvement here as well. And the hold time ratio as well. People are still not losing, but they're not bleeding as much as in the previous level. And the reason is because they've structured some of parts of their trades. I mean, they've started, they start getting aware of stop losses. They've started getting aware of, for example, trading above a moving average, or they're more conscious about what they do. They're still not there in terms of being profitable, but they can still control some elements of the risk a bit better than before. Okay, so we are back at the conscious and competent at the trade development stages ladder. In order to go from stage 1 to stage 2, you need admittance of ignorance, as we mentioned before. In order to go from stage 2 to stage 3, you need learning, you need knowledge. But when we talk about knowledge, actually there are 2 types of knowledge. Let's see which are the things you have to learn. Okay, back to the model. Mentioned at level 1, you need self-awareness. And self-awareness is comprised of a lot of things. We actually have created a whole program around it. It's called the GROW model, which quantifies what are your goals and the obstacles towards learning. So it's a seminar in and of itself. But when someone makes the effort to start to learn more about trading, then you have to learn about two things. You mentioned about knowledge. M is market knowledge, which basically is your ingredients. You have to learn about fundamental analysis, technical analysis. You have to learn about trends, momentum, volatility. But these are your ingredients. How markets move. What are the variations in sentiment and so forth. But when you put these together, the ingredients, and then you take the flour, the butter, and the milk, and you put them together, and then you create a recipe, and you say, I'll take a bit of this, and I'll take a bit of that, and I'll be using under these conditions, then create a recipe, which in trading terms, of course, we call it a trading plan. Now, a trading plan, it's still level 2 knowledge. A lot of people confuse that if I learn about the indicators, I'll be able to trade, which is basically market knowledge. No, this is not correct because you still haven't got a trading plan. You don't know how to put them together. Now, some people think, okay, give me a setup, give me a trading plan, put everything together for me in a coherent plan, i.e., a structured procedure, and I'll make that translate into financial success. And that's still not correct. You're still part in the knowledge of putting things together. It's still a trading plan. And the reason there's a difference between level 2 and level 3. Is that trading is not a theoretical exercise. It's not something that you memorize, because it's not just an intellectual. It's primarily a psychological. It's psychologically demanding. It's the psychological, the behavioral finance factor of it that people trade. It's not people are not smart enough. It's not that people are not psychologically strong enough to sustain the adversities of the market once they have come to this stage. So let's look at this in a bit more detail. Again, sorry if I'm going a bit faster than usual, because this seminar, it's a small part of the one I do. And each of these levels I have broken down. I have a lot more information on profitability, on psychology, on the specifics of what is market knowledge, because obviously market knowledge is a very generic term. So I have the core 4 of self-awareness. I have the core 4 elements of market knowledge, the core 4 elements of a trading plan, and what are the things you have to learn. But so I'm just trying to give a bird's eye view because of time limitations. All right, so let's look the third stage, which is conscious competence, which means at this stage you've started making money. Right, problem 7, at this stage, of course, you still have a problem, and because yes, you do have the knowledge, you know about the fundamentals and the technicals of the market, how markets move from point A to point B. You have put a coherent plan in how to trade it, but knowing and doing are two completely different things. Learning a recipe does not make you a chef. Learning a recipe does not mean that you learn how to cook. And if I make the assumption that most of the listeners of this webinar are male, and I'll give them a bit of a test. You take a cooking book and look at any kind of recipe in that, and take that recipe, give it to your wife, and then go to the kitchen and try to cook the same recipe. I'm sure that in 90% of the cases, women, because of experience, they're much more competent in their cooking skills. Although both will be looking at the same recipe, but one person will be cooking it better because of experience. And I'll be the prime example of that with my wife. My wife is actually a very good cook. So we will both be having the same recipe, but her food will be tasting much better, because there is the difference between knowing and doing. Likewise in trading, you may have a recipe, a trading strategy, but when you have the human element of trying to execute that strategy, that creates an extra set of problems. And that brings to the next challenge, which is, yes, you start to realizing that knowing about a setup and trying to applying it, and the human factor, the psychological factor, is two different things. But then you have to see and reverse engineer why you're doing things. Why are the problems you have? Your hesitation in your execution, your hesitation in your exit strategy, in your position sizing. And this is the part of the learning procedure when we start focusing on trading psychology. And let me digress here on this point because I think it's very important. When people start out in trading and they start losing money, they think it's probably because of their psychology. And I beg to differ in that statement. The reason is because when you start trading and you don't know what you're doing, you're losing because of someone's your ignorance, to put it that way. So that tends to affect your psychology because obviously nobody wants to be losing money. So your bad psychology is a byproduct of your lack of knowledge. But when you have come to stage 3 and you know your stuff, you know your market knowledge, and then you've put this into a trading plan, and then you started executing it, and you're not executing it like you're supposed to, then it's a problem in your psychology. Then you have to examine, why are you hesitating in your entries? Why are you not taking your profits too early or too late? Why are you having too much of a position size, and so forth? And now it becomes a psychological element which still has to be studied very thoroughly, consulted, and it's a study in and of its own. All right, technical profile of people in stage 3. Their mentality is that trading is the hardest way to make an easy living, because at this stage people have started realizing that it's a lot of hard work to become a trader. And I have to say that unfortunately in the media it has been so misrepresented trading as a lifestyle for someone to make money and in an easy way. I mean, usually people are depicted to be with a laptop by the beach, drinking some kind of a juice from a coconut, but it's further from the truth. Believe me, it's a lot of hard work. It's literally the hardest way to make an easy living. Yes, it does have a lot of advantages, but in order to achieve that level so you can be enjoying these advantages, it takes a lot of hard work. Time commitment is intense. People at this stage are very serious, very professional about it. For them, it's not longer a part-time endeavor. They are fully committed to it, and they're treating it like a job, like any other job. Trading plan, yes, they most certainly have one. And trading journal, they also have they have one of these as well. Trading journal, I heard Larry Williams once say that it's probably the most important book you will ever read. There is so much information through one's trading journal. If we all started spending more time reading, actually, and not just reading, studying our trading journals, we would gain a lot more information than probably 3/4 of the trading books that we have on our trading bookshelves. Key statistics on this on stage 3. Size of the market is around 5%. The win percentage is around 50%, more than 50%, which people, by this stage, because of the practice they have put in, they're winning more times than they're losing. But more importantly, the win-loss ratio has tilted to a 2-to-1, which is because it's not so much how often you win, but how much you win when you do win. Because, for example, you can be following a trend-following strategy, which means you don't win more than 30 to 40, 45% of the time, which means by definition you're losing more often than you win. But the difference is your win-loss ratio is probably 3 or 4 to 1. For example, for every £1 that you lose, although you lose it more often than you win, when you win, you actually win 3 or 4 or 5 times that amount. So on the balance of things, you have a profitable strategy. Hold time ratio, again, it's 2 to 1 because people have discovered risk management, which is taking your losses quickly and then letting your profits run. And since you're letting your profits run, timing is running as well. So your hold time ratio, again, it's tilted towards having more time in profitable trades than losing trades. Again, I'm sorry if I'm going a bit too fast. We've missed a lot of information which we could be added during the seminar, but just trying to make sure that someone doesn't have any problem with starting with the next speaker. Okay, so this is the trade of development ladder, to put it that way. Stage 1, unconsciously incompetent. You don't know that you don't know. Stage 2, consciously incompetent. In order to go there, you mean admittance of ignorance, basically knowing that we don't know. Again, I repeat, the whole trader development model is my own model, with the exception of these unconsciously incompetent and consciously competent classifications, which I'm sorry, I don't recall the name of the gentleman who found it, but I'm sure if you Google, you'll find it. Unconsciously competent to consciously competent, basically to go from stage 2 to stage 3, you need learning, you need knowledge, whether it's market knowledge or put this knowledge into a trading plan. And now, in order to go from stage 3 to stage 4, what you need is practice. Yes, you do have the knowledge, but we need to start practicing. So go back to our SMART model. Level 1, again, self-awareness. In order to go to level 2, you need market knowledge to learn about fundamentals and technicals in behavioral finance. Then we need a trading plan, put this into a procedure, but we're still at level 2. Level 3 is about repeat and review. We have to practice the trading plan. We have to, again, there's a whole model of how to put it into practice. So yes, of course, you can go into demo, which is about, because some people have a problem against demos because they say it's not the real thing. And I would agree to it. Yes, it's not the real thing, but you get 80% of the experience with 0% of the risk. But you have to treat it the right way, and there is a procedure on how you learn on the demo. Again, it's a systematized procedure on how you learn a demo. You not just open an account and then start pressing the buttons. There is a procedure on how to actually profit from a demo account, paper trading. And then not just repeat, but also review, which means you repeat from a technical point of view and also from a psychological point of view. And that means that you'll be seeing, if you executed the trade correctly. If you didn't, you have to see what is the mistake attributed to. Is it because you didn't learn the theory, or is it you learned it but you didn't at that time see the setup, or is it because you hesitated to pull the trigger, and so forth. So you're examining yourself both from a technical and a psychological point of view. So the fourth step, to reach level 3, the fourth thing we have to learn is repeat and review. So then we reach the fourth level, which is unconscious competence. And at this stage, people, through experience, they've learned their stuff so well, so it's become second nature. But still, there are challenges even at this level. Problem 9, creating different strategies for different environments. All right, so suppose someone has created a strategy, they've learned their markets, they've created a strategy, they've back tested it, they've started practicing it, they have good results. But the problem a lot of people reach at this level is that they usually become what I call one-trick ponies. Now, a strategy is a way to capitalize, or to capitalize in a particular inefficiency. For example, a trending environment. Then you say, I'll have a trend following strategy. But momentum and volatility changes. There is a lot of volatility in momentum during the market cycle, which means that mothers are sometimes it's trending, sometimes it's not. So when it's not trending, so if you use a trend following strategy, obviously you will be bleeding through the ears. So you need a different set of tools, you need different strategies to take care of that particular market environment, and so forth. People who reach stage 4, a lot of them have become very good, very proficient at trading one particular market, one particular strategy, but eventually, since the market cycle changes over time, they may start losing just because they don't have an answer to a different problem now. So the solution to this is what I call system diversification. I have different strategies for different market environments. Yes, of course, you have to be learning these one at a time, but you have to realize that there are more than one types of strategies that you have to be mastering if you want to be making it in the long run. Being a one-trick pony is a recipe for eventual disaster, because at one time you will be making money, but when the market changes, you will be out of sync. The 10th problem is what I call system degradation, which is even worse than problem 9. Because problem 9 means, okay, I have a trend following strategy, but the market it becomes trendless and it doesn't work. Then the market starts trending and my strategy starts working again. But at problem 10, it's called system degradation, means your strategy has failed. And that, even if you have the environment that in theory should make your strategy profitable, it does not, because the logistics, the technicalities of how you how you try to capitalize on that particular market environment have changed. Markets change, correlations change, fundamentals change. For example, look at all of strategies up until 1998. There wasn't such a debt problem globally related on the correlations between bonds and stocks, and then it turned on its head. Or opening range brackets. I can make a lot of strategies. I can name a lot of strategies that have stopped working, both on the fundamental and on the technical side. And may I say, although I'm representing the Market Technicians Association, I mean, I'm the chairman of the UK chapter. In heart, I'm a fundamentalist. Yeah, technicals is a way to observe what markets are doing, but markets move for a reason. They don't move because of the XYZ oscillator became oversold or overbought. That's just the result of it. So my own personal opinion is that we should be also looking at the fundamentals, going towards a fusion approach. And actually the MTA is working towards that goal, which is fusion is the amalgamation of technical analysis, fundamental analysis, and behavioral finance. So you'll be sitting on a three-legged stool which looks at technicals, fundamentals, and behavioral finance, because at each principle tries to answer a different question. Fundamentals try to answer the why, technicals the how, and the behavioral finance is by whom. All right, so this is one of my favorite quotes from Joe Granville. As soon as you think you've got the key to the stock market, they change the lock. So there's nothing more constant than change, an ancient Greek philosopher said. So we have to be on our toes like ballerina, because what we see today, there's a very good chance that it will not be the same going forward. And again, system degradation is a level 4 problem. Charles E. Young, education is a lifetime pursuit. Success requires the constant acquisition of knowledge and skills to compete in a world of accelerated change. And that's a common thing I have found over the years, because I have truly been blessed to meet most of the top traders, or at least top technical traders in on the world. I mean, if you take any kind of technical analysis books, I've met most of these gentlemen that have written these books. I've been happy to meet Tom DeMark, Larry Williams, Alex Elder, Martin Pring, Linda Rashke, most of the top names in our industry, and a lot of others who are not that well known because they haven't published books, but are equally knowledgeable. And I can tell you one thing, all of them have an immense thirst for knowledge and looking for answers. And let me put another way. Complacency is not a word in their vocabulary. All of them are top people in terms of their desire to learn and expand and go further. So trader development stages, again, we mentioned, we'll go briefly over this. To go from stage 1 to stage 2, you need to admittance of ignorance. Then we need to learn markets and a trading plan. Then we need to practice that. And then we need experience, I mean, continue practicing to go into a deeper level of knowledge, and continuous learning, of course. So my model is level 1, self-awareness. B is about market knowledge. Level 2 continues with a trading plan, putting the knowledge into a coherent procedure. Level 3 is repeat and review, which means you have to practice that, and preferably in a supervised way, because you need feedback in order to tell you what you are doing wrong. Page 8 of XYZ book won't tell you what you did wrong. You need someone to mentor and provide you feedback on what you're doing wrong. You can't be both a patient and a doctor. And level 4 is what I call transformation and trading. And transformation is because you start shifting your mentality from the XYZ oscillator, the ABC fundamental indicator, into how you can create profits from other techniques. For example, system combination. You have two methodologies. One methodology does this, the other methodology does that. But when you put them together, the result they have is completely different than if you trade them separately. So portfolio and how you can combine trading systems or trading methodologies in your portfolio is one way that advanced traders look at. The second is position sizing and how you can translate your certainty or lack of it in your trading decisions through position sizing algorithms, when you step on the gas or not. Or other ways is how do you diversify, because you can, there are three ways you can diversify: either methods or time frames or across markets. And these are this level of activities what people level 4 try to excel: position sizing, diversification in the trading systems, in your trading methodologies, and or diversifying across markets, diversifying across time frames. They're not so much into the methodology of optimizing XYZ oscillator or that we'll be buying here, there. They've gone to the next stage, next level. So that's level 4. And of course training, because they have, like I mentioned, a huge thirst in knowledge, in learning more and practicing, and again and again and again and again. I can't stress enough how many times you have to be practicing and put things on demos and backtesting and so forth. I hope I haven't scared people off too much, and of course I'm sure there will be a lot of questions, because during my the workshop I do to fully explain the trader development model, there are a lot of information which I could not include. And here's my offer to the people: if you want to be learning more about the trading system itself, the trader development system, and I mean what you have to learn, I do a free trader training workshop, which means I will be putting you put more information on what you have to learn. So irrespective of if you like me or not, or you don't want to do business with me or anything else, you can still have knowledge and apply it, even if you means that you feel more comparable to someone else. But but you will have at least a very solid and systematized structure upon which to progress and systematize your knowledge and your the path to which you will be working. I hope I have finished on time. I've tried to put it as much closely to 5:35.
That's Alex. That's absolutely terrific. Looking at some very positive feedback already from David. Please tell Alex his presentation is the best I have ever heard. So there we are. It's resonating with everybody. We have time on our hands, so we've got about another 5 or 10 minutes for which we allow for questions, and I'm sure there's going to be some questions coming in. Here from Pete. He's asking, can you give us any indication of the average time needed to go from complete beginner to stage 4?
Linda, I can give you a quote, or Linda Rasky answers this question, says, okay, how long does it learn how to trade? And she says, look, if you're smart, if you're smart, it will take you 5 years. If you're really smart, it will take you 10. Now, jokes aside, I think that it's very difficult to quantify, because it depends on particular circumstances. Some people have to have stronger work ethics than others. Of course, that will put you ahead of the curve if you're really devoted to it. And second, another factor that will put you ahead of the pack, so to speak, is if you choose to work with someone and have a mentor. Someone can help you and show you the tricks. That will cut a lot of the mistakes that you will be doing and improve your learning curve. Also, it will be of great help if you have support, like I mentioned, from a mentor. You also have support from your family, because I would ask everyone, if they want to be start to look into trading professionally, please do discuss this with your better half, because you will need their patience, and they will need to be patient with you. You will so that's another factor that because if you're, for example, if your spouse starts making causing trouble and saying, okay, get a real job or this and that, and becoming a bit impatient in your learning process, that will cause you to start overreact and make mistakes. Another factor is your financial condition. People have some cash on the side to support themselves to do it full time. So, for example, I have XYZ in my bank account, and I can live off of that for, I don't know, 12 months or 18 months or 8 months, depending on how fast you learn and how much time you devote it. Obviously, it will have a much better result on your psychology rather than hoping to trade your way out of your, I don't know, your mortgages, your rent, and start thinking that you will be making money from day one, because that's a recipe for disaster.
Thank you, Alex. Now, Selva is asking some questions about the free trader training. Is it only available in the UK? Is it a workshop or is it online? Do you have any more
Good.
information? What kind of format would this workshop take?
Yes, good question. Well, I will be doing immediately a workshop live. But that said, I will also be putting this online, and so it will be available for people to watch wherever they are. So the answer is yes. You don't have to be in the UK or in London to participate. Now that said, if someone is here, obviously we can meet, because during the sides of the workshop we can to discuss more personal issues regarding trading, and we go off on usually on a tangent. But to get the actual workshop itself, no, you don't need to be in the UK. So please
That's
do
right.
send me your email, and then I'll put you on the list so you can receive it.
We should probably let you know that Alex and I are working jointly on developing the online course as well. So that should be available shortly. I'm hoping
Correct.
within weeks. I'm hoping we'll be able to get that.
Yes, yes, that I
So
forgot to mention this. Yes, Simon and I will be working on a project like that, so we can put parts of the model there. And again, what I'm trying to make here is I want to make it the whole procedure as transparent, as systematized, as verifiable, as falsifiable as possible for everyone to understand how we go from step one to step two to step three to step four. What are the levels we have to go, which are four? What are the things we have to learn, which are five, and so forth.
fantastic. Well, it's a question for me really. I think Trevor's saying, do we only have UK presenters and traders on the events? No, we don't. We have people from wherever, and it just happens because I'm UK based that the majority of the speakers are UK based. But of course, we have our next speaker is coming to us from North Carolina, Randy Howell from Trader State of Mind. And last month we had 3 American speakers, I think, on the show. So yeah, we're trying as much as we can to be international in our flavour, and talking about the international markets and not
Yeah, and Simon, I would
the
really
UK.
like to thank you for the efforts you put to put these events together on behalf of the whole community. I'm not just saying, obviously, personally as a speaker, thank you for being invited here, but I think it's really important to congratulate you on your effort on behalf of the whole trading and the trading community, because you put so much effort into putting these events, and I know how much work and times it takes both before the event in order to organize and during the event. So again, I think
It
I'm
does
speaking
indeed.
on
Well,
behalf of everyone to thank you for it.
that's very nice of you to say so. So thanks very much. That does mean a lot, because it is a bit of work, of course. Just scheduling everybody, making sure everybody knows what time they're coming and going. Not least of all, just giving up the time. So a round of applause, says Trevor. Thank you very much. Thank you, everybody. That does mean a lot. This is part of the fun, of course, of doing these events. Is they're quite intimate, and it's lovely to be able to interact directly with you all I wish we could unmute everybody, but the logistics are such that we must just limit it to the message box. But I'm glad it's working for everybody. I'm glad you're enjoying it, and I appreciate the support that you all show me every month by coming back. And of course, welcome to all the new people that are joining us. So it's a growing community that we have, and it seems to be working for people and actually making a difference, which is what it's all about. So delighted about
Yes, it
that.
is. It is.
Super. Well, if there's no more questions for Alex, I'll round off by saying thank you again for Alex. It's been super to have you again, the first time this year. We will be letting you know when that online course is available, but of course get in touch with Alex directly. I posted his email address in the chat box there, so you can get in touch with him.
Yes, may I also say that the material we'll be putting on with S.M.A.R.T together will be different than the one we have here. So by all means, there's no overlap between the two.
No overlap. Fantastic. Great. Well, if you are ready to for me to take the controls back,
Yes,
Alex,
most certainly.
I will do that just now, and we can carry on. I'll just take the presenter role back,
Okay.
and I'll say Alex Spiriglou from Trader Training and Development. Thank you very much for joining us
Thank you. Thank
again.
you very much, Simon, and of course, thank you each and every one of you for having spent your time. Because I know you all wish to, probably are home or wish to be with your families, and I think it means a lot to me that you shared your time with me. Thank you very much.
Time well spent. Thank you.
Bye bye.
What a lovely man, Alex Spiriglou. I especially liked his phraseology at the beginning of the presentation about people learning to trade, how they open an account and read a book and then donate to the market. I think that resonates with us all, making too many donations to the market. So hopefully we're trying to combat that. So welcome everybody. I know we've had an influx of new attendees joining us in the last hour for the start of the evening session of this round the clock investor live event.